but this was the real first one where we had to say, hey, we are the New York Times. This is how journalism gets made, and this is why you should pay for it. And it paid for itself in spades.
Token spend, we think, will outstrip salary spend in the next couple of years for a huge swathe of companies across the US. And today, that is like the least understood P&L line item.
You need to be on the platform, and it doesn't mean you have to be posting all the time. It means you need to be engaging all the time.
And that's what good brands do. They recognize that their brand is more than just their product. It's what they stand for, what their values are, and they take the time to get it right.
My name is John Mancini. I'm a partner on Mayor Brown. On behalf of my partners at Mayor Brown, some of whom are here, I'd like to welcome you to our New York office. I am one of the co-leaders of the Technology and Media Industry Group. Work very closely with our ECVC group. We are a proud sponsor of today's event. I'm going to just briefly take you through the agenda and then turn it over to Christian. We are going to have two panels, one on VC investment trends, which I'm sure all of you will find quite interesting. A second panel on building founder brands in the B2B environment. And then a group of founder pitches, the part of the agenda that I like to call our Shark Tank spinoff. And then finally, everyone is welcome to join us for a reception in our hub area. Despite being a elite global law firm, you'll see we have a pretty forward tech hub space complete with stock bar, pool table, 100-inch TV. We're delighted to have you join us for cocktails and heavy hors d'oeuvres after the event comes to a close. So with that, let me introduce Christian O'Rourke, the founder and CEO of Lantern Point Labs, an accelerator that started several years ago and has made quite an impact in Fairfield County and now in the New York City market. Christian?
Very nice.
Thanks, John. Welcome, everybody. Thank you for being here. I know that's a big deal these days, coming in person to stuff, so making the trek in from wherever you are. Can I get a raise of hands if you came from like outside New Jersey, New York, or Connecticut? Amazing. Thank you all. I mean, of course, people, clap it up for that. Thank you for those that traveled more than out of state into the tri-state area. Again, it's very much appreciated as we're continuing to grow here at Lantern Point Labs, and I'll go over what is Lantern Point Labs a little bit, just to remind you of what it is that we do, and a little bit about the progress that we've made, and then I'll hand it off to our venture capital panel, which should be pretty exciting. Again, my name is Christian O'Rourke. I'm the founder and executive director of Lantern Point Labs. Graduated Fairfield 2 years ago, and in my undergrad I was a part of the Fairfield Startup Program, basically a business plan competition on campus. Amazing program providing us all support, mentorship, networking opportunities, and then once you're done with the program, or at least you compete in a competition. There's some startup people in the room, raise your hand. Amazing. Number of students from Fairfield in the program. And once you're done, you win $15,000 in a business plan, you're all excited, all this amazing support, and then you're left figuring out, okay, how do I now bring this product to market? Okay, I need $1 million, how do I raise $1 million? How do I build a team? All these questions that largely go unanswered. And for me, I was like, this is frustrating. How is it that we have this incredible program, this robust alumni network at Fairfield, yet we're not bringing the two together? And so that's what inspired me to start Lantern Point Labs, and what it has turned into today is an accelerator program where we provide interns and experts to support companies. So early stage companies in the Fairfield community, students, alumni, founders, parents of alumni, and we help them fundraise and go to market. And how we do that is through our interns and experts model. So we have students that work on projects with the founders that could be doing market research, building financials, automations, whatever it helps them fundraise and go to market. And experts introduce them to industry experts, customers, investors. So what that means is we meet the founders where they are. Where are you today? Where are you looking to get to in the next 6 to 12 months? And we act as basically embedded part of their team. And the takeaway from what our model is it's a community flywheel. So founders get support, students get real world experience, and the alumni and community members get to engage in a meaningful way. This community flywheel, everybody gets to participate in the shared success. And that's here today. We have alumni, we have students. Raise your hand if you're in our program, venture consultants. Raise your hand. Venture consultants, Luke, Logan. Like the students in our program are, yeah, there we go. I was saying, raise a hand. There are students in the program that are working directly with these companies, and it's now more than ever of how are you preparing yourself for the future of work. And our students are working with these companies, pivoting each week, using the latest models. They're early adopters of, OpenClaw wasn't a thing a month ago, and now they're not working with OpenClaw, but they're working with Claude, and working with inside these companies, trying to help navigate the market and getting real world experience that comes out of it. And you'll see that, definitely chat with our students. And so with tonight, like as John said, we have the 2 panels. So we'll go over the 2 panels, venture capital, and then the other one will be on building founder brands in B2B. And then the founders will present. So with that, I would like to invite our next panel, which is Celine King, Sarah Lucas, Nick Daly, and Danny. There you go, Danny. Welcome to the group.
Okay, hi everyone. My name's Celine King. I'm the CEO and founder of Greener, and Christian is not only a dear friend of mine, I think he's also an unpaid therapist at times, and I had the pleasure of competing against him in the Fairfield Startup Program, I think just about 4 years ago now, which is crazy to say. And I was also part of LPL's first cohort, and the impact that has had on our early stage company has been pretty unbelievable, and I'm really excited to have this opportunity to come up here and moderate this panel. We have 3 amazing panelists who I'll introduce in a moment, but just to give you a little bit of background about myself and Greener, we recently closed and oversubscribed our first pre-seed round, which we're pretty excited about, so this discussion feels timely. And we are a carbon accounting and visibility platform for Fortune 500 supply chains and the fleets that they contract. So essentially we provide visibility for what happens in between point A and point B, to identify opportunities for better efficiency and optimization, and then automating performance reporting for those fleets to report back up to their customers. So with that being said, I'm joined here today by Danny Chow at Connecticut Innovations, Sarah Lucas, who is Managing General Partner of the Lucas Venture Group, and then I think Nick will be here shortly, Nick Daly, who is a Senior Associate at Primary Ventures. So why don't we jump into things? Before we do, maybe to get an idea of who is in the audience, if you could raise your hand if you're a founder, I think that would be helpful. Okay. Keep your hand up if you're currently raising money. Keep your hand up if you've taken your first check-in. Okay. Keep your hand up if you're close to closing. Okay. That sounds great. Okay. Well, something that I heard frequently when I was raising was that it ends up coming back to the founder when you're at a pre-seed stage. You're an early stage company without traction. People come first. And I think a lot of the times it's one thing to have an idea, it's another thing to execute on it, and that again comes back to the person. So if you don't mind taking a little bit of time to explain your perspective as an investor on the importance of investing in the founder outside of the business, I'm curious what your thoughts are.
All right. Can you guys hear me?
Hello?
Oh, we can share. All right. Technology these days, right? Thank you all so much for having me here today. Just want to say, Christian, great job putting this together. Really excited for this conversation. And thank you, Celine, for the great questions and the lead up. So they put in a lot of effort to sing. I've never had so many pre-calls for a panel discussion in my life. But I deeply appreciate it. So regarding the founder question, it is absolutely vital. I don't think you can be a proper early stage venture capitalist if you are unable to assess the quality of the individual and their ability to execute and build on their idea. I think when it comes to early stage, I would say specifically pre-seed, seed, maybe a little bit of Series A, the founder is almost what you're really betting on. You know, I tell people it's like a 3-sided triangle. You got a great market, great team, and I would say great product. You got to pick 2 a lot of times. but you really can't lose out on not having a great team. I can talk about this all day, honestly, but I think I want to leave time for Sarah to give some more input.
Thank you. It's my favorite topic. So I'm Sarah Lucas. By way of background, I run Lucas Venture Group, which is a third generation early stage venture capital firm located in California. We have partners in both Northern and Southern California. So our family has been in venture since 1958. My late father-in-law wrote his first check into National Semiconductor, and then my late husband carried on with a few really great investments, most notably Dexcom, and then Palantir was the one he was waiting for. And now my son and I run the firm, and it's really incredible to have the history and breadth of what we've learned over the last 6 decades, me being around for 40 of those years, and really observing how important people are. No matter what you bet on, no matter what size check you write, it's the people. And our rule is don't invest in people you wouldn't have at your dinner table, because you're going to be having dinner with them or doing work with them for 8 to 10 years when you're an early stage founder. And for founders, you should feel the same way. I never invest in anyone that I don't take out to lunch, that I don't take their team out, and we don't have a personal conversation, because you want to like them as people. And that starts, you need to trust them too. And so that starts with getting to know them. I think it's the single most important thing we look at. And it's, the other lesson is that my job is to do everything I can to help my founders and to help support them and help connect them with the right network. And I can't do that if I don't know them. And I can't do that if I can't really feel confident in my endorsement. So yeah, you said it much more eloquently, but we feel really strongly that it's about the people. Nick, welcome.
Thank you.
Welcome.
Sorry I'm late. So much of that resonates, Sarah, so I appreciate you kind of teeing that all up. A bit on myself. I'm an investor at Primary. We've been investing in the New York ecosystem for a little over a decade now, and at this point are probably the largest dedicated seed fund in the region. So we actually announced our 5th fund, which is a $625 million vehicle, 400 of that dedicated to our early stage strategy and 200 dedicated to essentially being able to double and triple down on our winners in the portfolio. So have historically New York roots, but have begun to invest in the Bay and throughout the US and into Europe over the last kind of 2 or 3 years. We're a generalist firm, but then specialize internally. So kind of best of both worlds for founders, we believe. And I think one thing that's very atypical about us is we're actually a firm of about 75 people today, which for a seed fund is like very difficult for a lot of people to reconcile. Ultimately, it comes down to where we put our management fees. We want to spend it on people and build what we think is not just a fund, but a firm. And where we operate a lot is just helping our founders execute day to day. So we have teams across go-to-market, recruitment, finance, design and branding, and our teams can basically leverage any of the people on our team on a kind of project basis. So a little bit of a different way of working with our portfolio.
Great, and Danny, I want to give you the chance to talk a little bit about Connecticut Innovations, but something that immediately came to mind listening to you guys talk about people first is I feel like I made a mistake earlier on when I was fundraising. I think I pitched upwards of 150 times and got 16 yeses, and that's how we got to close our round, which is a lot of meetings. And as a founder, I wasn't giving enough attention to evaluate whether I was reaching out to and conversing with the right investors for my business. And I didn't understand the importance of patient capital and people first when looking for investors. And so for the founders in the room, I'm curious if you have practical advice on how you could have a more refined lens rather than just chasing a check.
Just do your homework. I mean, that's what I would say is talk to people, do your homework. If you want, a warm intro to a family office or a fund, you find a connector. to give you the warm connection. Don't waste your time sending cold emails. I never answer them. I don't know if you do. But it's, so do your homework and know, oops, I think I'm losing. For me, I was telling these guys in our pre-call, the most challenging times I have is when people walk up and interrupt me at a lunch and pitch me on a company that isn't even in my interest zone or stage level, or they have done no homework. They just hear, oh, she's a venture capitalist. Let's go get her. And that just, I've never once invested in someone who came up to do that. Now, I understand the being opportunistic, and I certainly would encourage that if you have some sort of shred of information that this could potentially be the right fit for you. So I think that's one thing I would say is do your homework.
I would add that capital is very much a commodity in early stage right now in these days. And like Sarah said, who you choose on your cap table is like a marriage. You know, once you bring on an investor at the seed, the pre-seed stage, 10 years, that's longer than most marriages. It's going to be something that will last and probably make just as big of an impact on your life. So when it comes to doing that due diligence, I mean, VCs do due diligence on you. You should just be doing just as much due diligence on your VC. I mean, with GPT, Claude, whatever, there's so much information out there. And the secret bit about institutional venture funds is that a lot of the time, it's also a brand play for VCs. You know, Mark Andreessen said, like, if you're not in the top 15 deals every year that exit 80% of venture returns, you're not probably a good fund. But the only way to be one of those VCs to see those deals is to have a good brand. So VCs, institutional VCs at least, not family offices, can be very shameless about putting themselves out there. So a lot of times, you know, they might not take your cold DM, but they will definitely take warm intros. And, you know, 6 degrees of separation from most people in the room, especially in New York.
I think both of those points are really, really accurate. I think some of the best partnerships that we've had with our portfolios are from day one are discussions. I think no one here likes being like pitched, you know, with inverted commas, like jumping on with an AE from a particular firm or a SaaS company. Like, you don't. The best conversations are ones where there's questions back and forth, right? And I think of the best partnerships I've entered into with founders, those first calls are, you know, they often start with a question around like how we know the space, what's our thesis, you know, what are our lessons and learnings, and develops as such. And that enables us to really create a relationship with those teams where we feel, you know, through the diligence process, we can share exactly how we feel, what our hesitations are, and actually be able to create that dialogue instead of just being like, hey, welcome to 30-minute call, I'm going to take up 29 minutes pitching, I'm going to leave 1 minute for, you know, quick follow-ups. Like, that historically across our team like never goes well. Even if it's like very impressive product, even if it's a really impressive team, we just don't feel like that partnership approach, which to Danny's point, like, we're entering a partnership. It's going to be at least kind of 8, 10, 12 years. So being able to come back to my team and say, I think we can be genuine partners with these people is a key part of our investment process.
That's great. Yeah, and I think it all centers around the idea of partnership between founder and investor. And I want to, I guess, take this in a more practical approach when we're thinking about traction, what you actually have to have in order to get your first check in the door. Because something that drove me pretty much insane our entire fundraise was being told that we were too early while pitching a pre-seed fund, but it felt like they were a seed fund that wanted pre-seed terms, where we were being told, you know, you need 100K in ARR just to get a 25K check. And it's like, really? Because you don't advertise on your website. But maybe they were just letting us down in a nice way. And so I'm curious, from your perspective as pre-seed and early stage investors, if you liked the founder, you liked the business model, what were your expectations in terms of revenue, partnerships, and momentum to write a check?
I would say, being in VC, our job is to say no for a living, but we don't really say no. We say, come back later, or once you hit 100K in ARR,
stay in touch.
Stay in touch. We'd love to be added to your investor updates. And that's because the door is usually open for VCs if you're a founder. Honestly, there are not many capable people in the world building companies, solving really disruptive problems. And every VC wants to invest regardless, right? When it comes to talking and finding the right traction, I think that's when it comes down to a little bit about the founder and character. I bet you that if you had a prior exit and you had 0 product, 0 traction, you talk to a pre-seed fund, they'll be like, okay, sure, here's 100K. It's hard to judge people when you don't know them. And that's also why the door is always open for us, because there's been plenty of times where I've had founders come and like have their first pitch, great conversation, great product, great team, but they just weren't there yet. It wasn't sufficiently de-risked enough for us to feel comfortable putting money towards ROI. So what that means is we want to just get to know them better. So essentially, when I do say add me to your investor updates, I do mean it, because I've had founders add me to the investor updates. I see them build. I see how they actually think and get traction, get customers, and then eventually maybe a little bit of revenue. And that process of how they actually build a business is almost more important than the numbers they present on the screen. Because once we saw sufficiently, like, okay, this is the team, this is a founder that knows how to execute and actually can get stuff done, that got us comfortable enough to preempt their next raise with money. So it's a little bit of like, goes back to founder.
I think that's a really good point just to add very quickly. Like, I'd say about 50% of my time right now when I'm speaking with new potential founders is actually people that haven't even left their old companies yet. We call them like -1 founders. They're people in seat who clearly have this entrepreneurial edge, clearly have a track record of building internally, different products, launching new geographies, whatever it may be, and every organization has a percentage of these people. And it's now getting to the point on venture where we're like, we want to know these people 2 or 3 years before they even have their idea, or help them create their idea, so that we have like essentially first dibs on funding the company.
I'm just trying to think if I have anything additive. I think it's a case-by-case basis for me, is what I would say. I think it depends, every situation's unique, every founder's unique. I want to see more emphasis on their dedication to the company versus, revenue or contracts they've written, right? I want to see, like, is this, I've been a founder. It's like you go to sleep thinking about this company, you wake up thinking about this company. Am I right, Matt? It's true. And that's the kind of, so it's a vibe, yep. Right? And then beyond that, well, what are the options for traction? What are the paths to revenue? We've got an amazing company right now. We just funded. They have 2 LOIs from come out of the States, but we want the one from LA. So we're waiting, until we get that one that's going to be that conviction. We know that they can do well outside the States, but there's always got to be something that tips you over, I think. Mm-hmm. And there's a little I don't know, a little there's a little clue in there somewhere, if that makes sense. And that will be the thing that gets that for us. We get our confidence.
Mm-hmm. And I really like the point about like proof of progress, and like essentially encouraging founders to continue to update you as they build, because I feel like that's a great way for a first-time founder to gain credibility with an investor that they maybe don't have a direct relationship with. And I guess I'm interested because we have both West Coast and East Coast on this panel. Sometimes if you're reading headlines, you'll see that a pre-revenue, pre-seed, pre-product company is getting a $30 million check. And so I'm curious if there are differences in culture between Silicon Valley and East Coast, and maybe what you think those differences are. And again, I think it's back to the point we just talked about, where it's, a little bit of an art, not a science, for why you're backing those ideas. But I'm just curious what the perspective is geographically.
There's a lot of crazy happening in Silicon Valley right now. I will say that. I don't know if this is on. I think you have to, I've been through, a bunch of these cycles, and you just can't be a part of the hype. I think you just have to, remember your criteria, your discipline. That's at least for me as a VC. You might miss out on a deal, but we always say deals are like buses. You let one go by, there's another one around the corner. So right now, everyone in Silicon Valley is crazy, and the valuations are too high, and we're not buying it. So it's too frothy. I don't know. What are you guys seeing here?
I mean, at this point, I've split about 50% of my venture career on the West Coast and 50% here. I actually think that there used to be a lot more differences, even 5 years ago. I think that gap has collapsed significantly. And if you think about what's been happening in New York venture, Andreessen's building out a team here. Sequoia is actually sending their first full-time person in their history to New York soon. Thrive has obviously been an incredible kind of addition to the ecosystem on the later stage side in particular. So I think the gaps are becoming shorter and shorter. I think for me, what's most relevant is the sources of validation are very different. In the Bay, there is this gossip network ecosystem, and your friend's friend is starting this thing, and all the whispers begin. Here, I think it's a bit more validation through interrogation on the business model, on potential customer validation, and I think that you need to have a healthy balance of the two. I think the Bay Area, for obvious reasons, is very good at it's the seed inception investing on the most boldest of visions where no one else thinks something is possible. And I think us getting elements of that in New York, fantastic for our ecosystem, but also hopefully the New York ecosystem kind of rubbing off on the West Coast, I think will be healthy in the next couple of years, especially as this AI wave develops, matures, and maybe even flattens out.
Well said.
I didn't get to introduce Connecticut Innovations, but we are probably as East Coast as we can come because we are the state fund of Connecticut. We are a quasi-state entity, been around for 35 years. We're not directly related to the pension, but the state treasurer sits on our board. Our CEO is appointed by the governor, board of directors is appointed by the governor. This is a government job. We are very active. We deploy about 50 million a year. Half of which usually goes to new companies. We have 250 active portcos. We do everything, stage, industry agnostic, but sweet spot usually seed Series A. And I say all this because we are very institutionally East Coast in how we think and how we invest. We go deep on diligence. We don't care about FOMO. Sometimes we do. Most times we don't. And we definitely we're not seeing the stuff from Silicon Valley because we are a state fund. Our main catch and big mandate is that every investment we make, we require Connecticut headcount, either planned or current. So it depends. But I would say as a state fund, slow and steady wins the race. That's, I think, why we've been around for 35 years.
I loved every single answer. And I think I heard you guys touch on AI and this crazy bubble that we're in, and we could take this conversation in a million different directions. I want to start by understanding how it has impacted your evaluation of deal flow as an investor, where maybe the barriers to entry are lower than they ever have been. So you're, more focused on competitive differentiation and moat. That's something that I'm interested in. And then just generally, if you each could share within AI as a vertical, what you're the most excited about. What's real, what's not real.
Yeah, I think there's a few levels to this. I think first and foremost, we are embracing AI as a firm, and that's changing how we assess deals, how many deals we're able to assess at any one point. The whole entire company is on Claude Cowork at this point. I'd say 90% of people are using Claude Code to spin up their own assistants, their own agents, and all those kind of things. And that's the necessity within venture, I think, going forward. I think how we perceive AI, obviously it's incredibly exciting from our seat. I think the biggest kind of cognitive unlock on our side is, of course, labor pool spend, right? How do we access that spend, which is meaningfully and significantly larger than IT SaaS spend has been historically. So where we've spent a lot of time to bring us to a close is on AI native services. So for instance, de novo law firms. So we've looked at a bunch of things from Crosby, which is automating today kind of like standard contracts like MSAs, NDAs, and all these kind of things that historically, you send to Gunderson, they come, which by the way, I'm not throwing shade at Gunderson, they're our lawyers, but they charge us $800, in order to spin a relatively simple NDA around. It takes a couple hours. With Crosby and things like that, you can get that back within an hour at a fraction of the price. And these are, they have lawyers, embedded within their ecosystems. So that's one example. We've also looked at BPOs in the insurance space, for instance. So like, what does an AI native TPA look like? I don't know if anyone ever here has been on the receiving end of a Sedgwick or any of those TPAs, but they are, got their Trustpilot score, and it's like less than 0 out of 10. It is not a great experience. AI has the ability to completely transform that experience on the claim side for insurance. So AI native services being where we spend a ton of our time.
I just want to give a thank you to our hosts, the Meyer Brown team.
Much better, much better.
Thank you, John. I think for us, similarly to what Nick has said, but for us, the most exciting unlock is we are able to look at so many more companies. It used to take us 4 days to decide if we even wanted to visit with a company, and now we can determine that by the end of a day. Just really getting through that diligence so much faster has been able to unlock so many more companies for us. So I would say that's the most exciting. We're all on Claude. Yeah, I think what's interesting is if you think back even a few months ago, to how things have changed, right? A year ago to how, when these agents were first brought up, like now everyone's embracing them. And I think if you don't get on board now and don't figure that out and learn, you're really going to feel overwhelmed and left behind. So I think part of this is making sure we're staying current, and that's that every step of the way we're creating efficiencies for ourselves, and that our companies are as well. I mean, this is the other thing we're saying to our companies: how are you using AI? If it's not specifically an AI company, how are you using it? How is it increasing your efficiency? So we're also monitoring that as well.
I wish we were on Claude. Being a quasi-state entity, Copilot, it took us about 2 months just to get GPT. So I can't imagine what the fight would be just to switch from GPT to Claude, but I'm gonna fight a good fight. With that said, we do obviously see everything, a lot of things in AI. It has accelerated our workflows tremendously. I was able to spin out 2 memos in 2 days when it used to be 1 memo a week. It's incredibly useful, and it definitely enables us to do more as a generalist, individual investors specifically. And like on that note, where AI application can be built anywhere. I wish we could invest in out of state and do more out of Connecticut. But one of the areas where we're kind of able to leverage our value as a state fund is capital-intensive businesses. So specifically the infrastructure layer of AI. So we have a new quantum AI fund. New director came in from Coastal Ventures. She's doing a lot of work. We're going deep into magnetics for better semiconductor work. We're going to quantum, obviously. We're going into AI compute, where we're seeing really, really capital-intensive businesses that I think most non-interested deep tech funds would balk at. And that's kind of where we are dedicating more time to, because AI is not going to replace the power facility, but it will replace the transformers or make them more efficient or something like that. And that's the application infrastructure layer of the 4-layer cake that Jensen loves to talk about.
Really interesting. And I actually just had an investor basically in so few words say to us that if our data and our analysis doesn't produce some sort of material physical value or ROI for the trucking industry, that anyone could replicate it. And I don't actually mean that that's not true. We have a good competitive moat, but it was just an interesting way of thinking about when we're talking about software and AI, like when you as a founder reevaluate what value and ROI you're providing to your end customer, how you can take it one step further so that other people can't replicate what you're doing. I think we're coming close to
Can you do
time.
quick questions?
Yeah, Christian's
Quick
telling me to
response.
wrap it up. So something that I'm interested in is it seems like one of the deciding factors of whether a business is successful or not, whether they can control it or not, is market timing. And so I'm curious as investors if this is your best guess. Is there any sort of formula that you're using internally that you can share with us? How do you evaluate timing for a business that you're currently looking at?
What do you mean by timing?
I guess relative to the market that they're looking to go into, like I feel like if you were to look back at unicorn companies, you could so easily say like, oh, you know, Uber got it right, or Apple got it right, or they were disruptive at just the right time, and they were, if you look at the graph, they're just coming up, and it seems really easy to do retroactively when you're looking backwards. Is it a gut feeling? How are we evaluating that?
I would say one of the kind of ironic parts about being a VC investor is the pattern recognition. But it's ironic because if you're supposed to be investing in N of one kind of companies, there should never be another company just like that. But at the same time, the more experienced you are as an investor, the better your pattern recognition gets, and the better the small, more subtle nuances that you can pick out that can maybe trust your gut on sometimes, and that get validated by the data or whatever you else might want to use. But it is a lot of guesswork at the end of the day. For every Uber, I mean, Uber started out just with taxi drivers, right? Like they were doing the medallions. Who would have thought that they would end up doing what they do now? They had to go through many pivots. You can talk about the Airbnb story is so famous, you know. It's really hard to see, which is why it kind of goes back to the end of the day to the founder. Does this person have the grit, the forward-looking thought, but also the kind of desperation to make their idea work, that they're willing to try everything and pivot when necessary?
I would say, you know, timing is everything. We all know that, and we've had plenty of fantastic companies in the wrong place at the wrong time. We had a great company that was doing robots for Walmart. They were in 3,000 stores, and then the new CEO came and said he wanted to prioritize people, and the robots went away, the company went away. So and that was not something we could have predicted, because everybody was going by the way of robots, right? So we've got a couple examples of these. I mean, you know, the tariffs have wreaked havoc on a few of our companies. That was not predictable. So I think to that point, it goes really to Danny's comment about the grit of the founder, and can they pivot? Can they take their runway down until they can figure out what to do about the tariffs? We tried with the robots, and that the company tried for quite a while, but that they failed ultimately, but it wasn't for lack of trying.
Sure.
And so I think that's where, again, I know everyone thinks we're just touting people, but it really is people, and making sure that the founders can pivot when necessary, and also that they know when to quit. That's an important one too, that they know when to say, you know what, we're gonna just take the lessons and we're gonna move on. And those are tough, but you know, that I think that's timing matters.
100%. I resonate with a lot of what you just said, and we say internally a lot, like teams run out of energy more often than they run out of money. And I think to your point, like finding teams that are nimble and agile enough while remaining opinionated about how they believe the space should be is paramount. And we've got, you know, if you look at companies like Clay, for instance, in the go-to-market space, which is, you know, really forged this category of go-to-market engineering. Like if you look into that story, there was 4 to 5 years where they were just kind of stumbling around in the dark, trying to figure out like what exactly they were trying to do. And then they came across, you know, enabling agencies to offer more data to their customers, and then, you know, things like Parallel and other tools started coming around to more easily enable them to query the internet on very, very niche searches. And now Clay is a multi-billion-dollar company, and most of that has probably been aggregated, most of that enterprise value has been aggregated probably in the last 18 months. But, you know, it looks like an overnight success story, but in reality, that team was resilient and bubbled around for probably about 5 years.
Shall we open up to Q&A? I'll walk around if, or you can just I think there's the
Shall I
room.
just stand up and yell?
Stand up.
Yes. I love the focus on people. I'm on my second startup. Been through the fundraising in the 2020, crazy valuations, all that stuff, going through it now. What is the balance on a first call between the pitch deck and the people? Because that's where I struggle. It's like, I find folks like you guys who start off a conversation, I want to know who you are. And then there's others who are, okay, get through it, and you don't get to kind of talk about who you are and what your story is and all that stuff. Any recommendations there?
Don't take those calls.
Seriously, I agree.
I mean, we say to people all the time, take the right money.
Right,
and
of course.
that really should be true for you, and it should be true for us, right? Give the right money. If that person isn't interested in you, I mean, I've had it done to me. We were on with a team for a very fancy financial institution right in the city, and not one of them was looking at us on the screen. There were 10 of them on their laptops. No one was looking at us. And we got off that call, and I said to my partner, I said, I don't care if they came to us tomorrow and said, you can have a blank check. We're not taking that money from them. So I think for you, I'm sorry that's happened to you, and if those,
So many times.
but I'm not sure what else I can say, because I don't think anything you can do can redirect that call.
Yeah.
That's a tell. So you should be listening to what that's saying.
Yeah.
What was your name?
Lynn.
Lynn. Thank you, Lynn.
Yeah, then I would just try and remind yourself, I know it's difficult, but you are in the seat of power. You are deciding who comes onto your cap table. And you're the ones to decide how that call should go. And I think historically that shift has been slower, but that is happening right now. It's a founder's market and has been for a couple of years.
I've got one. So we're all VCs, right? Aside from injecting,
I think so.
yeah. So
How identify.
injecting capital into these founders, grid, all these that you identified, what else do you do to support the founders, whether it be their employees, their companies themselves? I guess it's a question for all three.
Oh my gosh, well, Nick has a great example that's going to put us to shame. So, Nick, why don't you share?
Yeah, we think about that a lot. I think to Danny's point earlier, like capital is becoming a commodity. The venture industry has matured significantly. To our very first conversation, I wouldn't even consider us all the same type of investor. I think we're all different types of investors, and there are many more colors and styles of investing at this point. Where we've spent a bulk of our time and frankly management fees is on building our team. We think that can be our long-term competitive advantage as a firm and help us win the best and most competitive deals. What that looks like is we have a team of about 60 people. They are early operators, mostly in their career. They span everything from go-to-market, talent, brand and design, and finance. And they're there on an advisory basis, but I think that's table stakes nowadays. A lot of firms have gone down this platform route. What we think is much more interesting is we actually embed our team members into our portfolio as if they're employees. So our teams can come to us and say, hey, after this round, I want to go hire 11 people, okay? 6 engineers, a few go-to-market people, a chief of staff. Today, that takes the founding teams 3-4 months to put those people in seat and takes them away from the core of the company. The alternative is to go pay a bunch of recruiters a lot of money, a fifth of your seed round, and all of a sudden you're like, oh, I need to go fundraise in 6 more months now. Option 3 is just take one of our recruiters. So they'll come in, join the company, they'll be on the Slack, they'll be in the daily stand-up, they'll gain context of what the company actually needs, the culture of the company. They'll then make those hires and then come back into primary after 3 months. And we just keep that flywheel going.
I mean, obviously that's the dream. I have a 6-person team. So we do things a little differently, but one of the things, I mean, this is amazing. So if you can work with them for funding, I would recommend. One of the things we do that we make sure, we do 2 things. We connect our founders. So we have either dinners or calls where our founders are getting to meet each other. And those are really important because they are working in entirely different industries. But yet I still have founders that call each other and will say, I need some advice, even though they're in different sectors, but because they trust each other, because they met through us. So we do connect them and try to keep that conversation going. The other thing we use is so we've, as I mentioned, we've been around a long time, and so we have quite a network mostly in Silicon Valley, but we really utilize and leverage that network. So we just invested in a cloud seeding deal. I am not a chemist or a scientist, but I have 3 of my LPs who are and who love to evaluate deals. So we are plugging them in, and then we're having them work with the founders as well in that way. And then we do our best with our team, and activating that network means we can help find advisors. We can help really bring them the resources they need from a people perspective. So that's where we're really strong.
I would say, all the above. I wish we had as much capabilities as primary, but for us as a state fund, our value add comes down to 3 big buckets. One is business development, which is more or less table stakes for any fund. Second is talent. We do have 2 full-time recruiters on staff. They more or less know everyone in the state. And then the third one is non-diluted funding, which is probably a little bit unique for us as a state fund. We have grant money essentially available for executives in residence, technical assistance, and financial, legal, or accounting support. We can pay for founder relocation in some cases. This is where the state side comes help, but there's no tax breaks, no tax credits, unfortunately.
Maybe one more quick question or question with quick responses. If not, I have a question, which is, talking. Or does anyone have?
I just want to add, by the way,
Okay.
New Jersey has the New Jersey EDA. If anybody's a New Jersey founder,
Yes.
so very similar, and with tax credits.
Yeah, Metro North.
Competition.
I just have a question regarding, talking about capital allocation for teams in terms of AI. Nowadays can do a lot of your work. So when you're looking at how they're raising their round and how much is being put towards engineers, sales teams, basically roadmap for your team building. And maybe this is not the question for a quick response, but I'm curious how you are thinking about that when companies are raising their round, and how much of that should be put towards it, and what might give you hesitation in terms of how much money might be putting towards people and where that might be worthwhile in today's environment.
I mean, the extent to which we've been thinking about this is we want to see the company that helps figure that out. So one of the biggest challenges we're seeing is like token spend we think will outstrip salary spend in the next couple of years for a huge swathe of companies across the US. And today that is like the least understood P&L line item. So how do you help CFOs, CTOs, C-suite management more broadly understand that, plan that, make that more efficient, optimize that? Like if anyone's building that, we would love to work with you to do so. It's going to be a huge challenge. I think it's an incredible opportunity as well. I think our Claude bill has gone up like 200x in the last 3 months. We're not unique there.
I know you keep running out of tokens.
Yeah.
I would say for us, we're already seeing founders present who are raising less money, building with less people. So we're already seeing it, naturally.
But we're also seeing the complete opposite as
Are
well. Yeah, we're seeing there is the one person army, just raising $1 million or $2 million, but there's a lot of AI companies are raising 25 out the bat to go and do these things as well. Like it seems like a bifurcation between the 2 types of models.
I think that was true, certainly 6 months ago, 9 months ago. We're seeing a little bit more of a shift, but I agree with you. That's why I said it's too fluffy, but I don't know. Any thoughts?
I would say as a founder, no one knows your company better than yourself. I don't think it's the VC's job to tell you who to hire, you can recommend and give insights and guidance, but ultimately it's your company until you raise too much. But it should be your decision and your idea. We will have parameters. We will have best practices that we'll have in mind, maybe $1 million in marketing is probably a little bit too much for a seed stage company. But ultimately, you have to do what you do best and build.
A round of applause for us. Thank you guys. That was great. It's very exciting to hear from people who are deploying capital in this market, and to have them also join us. Context too of the community that we're building is someone was connected to someone. Obviously Danny connected to the state. It's connected there. Sarah, kind of full circle. I pitched her what was Fairfield Founders 2 years ago, and it was just a 10-slide deck. So pretty full circle to have her on stage today on the panel, which is super exciting. And then, Nick was a connection to from an alumni. So, great to be building up this network. Our sponsors are here, so I want to give them the opportunity to talk about, especially now. I think it gives good context for, all the things that you're thinking about as a founder. And our sponsors are a good representation of, what their offerings are, what they can provide founders. So I'm going to invite up both Summer and Jack, if you can please come up and tell us a little bit about what is Bankwell. Bankwell is also one of our sponsors, but Leader Bank and Meridian Risk Management.
Hi everybody, I'm so happy to be here today to represent Leader Bank's VC and tech team as a Fairfield View alum. Go Stags! Our team is based out of Boston and San Francisco. I came in from Boston this morning, but we work nationally with clients all throughout the country. A little bit about what we do on the banking side. We work directly with clients to build relationships. We offer direct client service. You will never have to use a 1-800 number if you work with us. No fees, no minimum balance requirement, and we also offer very competitive yield in today's environment. Beyond banking, the way that we support the startup ecosystem and startups and VCs alike is through our partnerships and our unique offerings. For the sake of time, I'll mention a few. For VCs, we do capital call lines, and for our founder clients, we utilize our partnerships like Fidelity. Fidelity is Leader Bank's largest institutional shareholder. We work with them to offer our founder clients complimentary 401(a) valuations and cap table management. Separately, recently we just launched a bookkeeping and payroll reimbursement offer with our devoted partners in the space. And we also love to be an ecosystem connector. We love to host events, sponsor events like we are this evening. We host private investor dinners. We do pitch showcases. And lastly, and most importantly, we like to make valuable introductions between our investor clients, our founder clients, and anything related to that intro piece. So if any of this sounds intriguing, I'd love to chat with you. Please feel free to come up to me. And thank you, Christian, for putting on such a wonderful evening tonight.
Two sponsors from arguably two boring industries. So we have banking and we have insurance. So my name's Jack Burge. I work for a Fairfield founded business, Meridian Risk Management. Our CEO is a 1989 stag, Joe Salamini, who played baseball at Fairfield. You can tell from the accent, I'm not from the US, I'm from England. So I came over here to play soccer at Fairfield University on a soccer scholarship. Quite honestly, Fairfield changed my life. I think the panel said it best. You kind of invest in people. One of the reasons that we got involved in Lantern Point Labs, being a Fairfield founded business, was for this gentleman right here. 5 minutes in his company, I was like, Joe, you need to get in a room with this guy. He is so impressive. What he's trying to do is exactly what you did all those years ago, started Meridian Risk. So what do we do? Well, honestly, I make a living kicking insurance companies in the ass. That's my job. I'm an insurance broker, so I run the employee benefits team at Meridian Risk Management. So we help procure insurance for businesses, for their medical, dental, vision, life insurance, etc. Why that's important in these types of scenarios for startups and stuff, you probably have all the ADP reps calling you all the time, right? Asking you to join their PEOs, right? Hands up if you're being victim of an ADP kind of call, yeah? I say that because my ADP rep is in the room right now. So we basically help navigate those, boring insurance questions that you have as a startup, key man policies, what happens if one of my partners is to pass away or something, I don't want to deal with his wife on the back end of that. So that's what we do. We kind of help navigate that scenario kind of going through. So we work with Fortune 500 companies, across the board. Quite honestly, I'm very much not retiring by helping startups in my industry is the kind of how we get compensated. It is very much about this young man right here and kind of what he has done and what he continues to build. So we're a very proud partner of this and kind of helping the next generation of stags. I loved Fairfield so much I bought a house on North Benson Road. I met my wife there, had 2 kids who will obviously never be stags now at this point because they're at campus all the time. So it's a pleasure to be here. It's a pleasure to be a sponsor. Like I said, it's been so rewarding being part of watching Christian grow and do this. And those fathers in the room, I'm sure he's exceptionally proud of everything he's built. So I would like everyone to give a round of applause for Christian.
Amazing sponsors we have, and that's also kind of a theme for tonight is people taking a chance on these startups. So the people that you're talking to the room, help them out any way that you can, an introduction, taking a call, providing you guidance. All of this tonight would not be without our amazing supporters, the sponsors, the advisors that we had, people taking a call with me, the call with our founders, across the board is thank you, of course, to our sponsors, but as well all the people that made tonight possible. I didn't say before, but a year ago we were in a small office in Chinatown and could barely fill the room with 20 people. So we've come a long way. And your feedback and your input on this, we are a startup ourselves, so we very much want you to let us know how you'd like these events to go forward. If there's ways that you can help, the QR code is in the book, so you can let us know. I'd like everyone to flip over their name tag. As you can see, there's names on both sides. That was feedback last year. That's the level of iteration that we are trying to act on, that we want your feedback. This is a startup. We want to integrate and improve and bring this to more value for people in the room. That goes for saying as well with our sponsors is by you going and speaking with Jack and speaking with Summer, as well as as Bankwell and Meyer Brown, by you bringing value to them, that allows us to do more events. So that is in fact helping Lantern Point Labs is by bringing value. So if you feel that you yourself or somebody that could be potentially someone, a client for any of these companies, that helps Lantern Point Labs. So take time to speak with them. They're also alumni. Some are I was graduated with from Fairfield, and then Jack and I have gotten to know each other over the past few years. We also have other ways to support, which is in the program we are trying to raise $15,000 tonight. We have $3,000 secured. Your support would fund the tools that would support the students and founders in the program. We are a nonprofit, so it is tax deductible. Tax season is coming up. If you still have things left over, but that directly supports the students in this room. And at the end, I'm going to have them all raise their hands, and you should really go and speak with them, as they're really impressive group of students that are working with us and young professionals that are looking. And that's hiring somebody. There's so many different ways. This is community-built organization, so so many different ways that you can help us. With that, I'm going to hop off the mic and invite our next panel up. We have an exciting panel tonight. We have Linda, Danielle, Bill, and Michael will be joining us. If you want to just come up on stage, or on stage here. Really exciting panel. Also context too of how this was all made possible. So one is the Fairfield Alumni Network. I'm sorry, John too. The one is the Fairfield Alumni Network, but as well is LinkedIn. This would all not be possible without the LinkedIn is, and I'm saying that too because Danielle is on this panel, which we'll get into. But seriously, in terms of even just this panel, as of a month ago, was not made out, was not built out. We were able to find some alumni that were willing to support. So thank you all for joining. The team that we've been able, the founders, all these things, have been through a mix of the Fairfield alumni community as well as LinkedIn. So excited to kick off this panel. So with that, Michael, I'll hand it off to you.
Great, thank you very much. You guys hear me okay? Yeah. Great. So we're going to start with some introductions. I think I'm going to do them for everybody, just like save a little time. I'm Michael Dresner. I spent 35 plus years in the sports and entertainment field. mostly at the nexus of content and, thank you, content and technology. I worked at the NBA, Madison Square Garden, and in an interactive agency called Digitas that actually lived through the website boom. So it's fun to watch the AI boom. I hope AI does better than the web boom at the time that I was living through it anyway. Today I have a consulting practice where I advise IP owners on how to produce, distribute, and monetize content, mostly at this point on social media, but we're exploring AI services as well. And just to give a plug to LinkedIn, I actually met Christian 2 months ago, I think, when he reached out to me on LinkedIn. I had started to work with Fairfield's Business School, and now here we are. So I'm going to start with John. You heard a little bit about John before, but he's one of the leading intellectual property attorneys with over 35 years representing some of the biggest technology companies in the world, including Google, Spotify, and AT&T. He was one of Google's lead litigation counsels on the Viacom and YouTube decision, and he co-chairs Mayor Brown's Technology and Media Industry Group and works alongside the Emerging Companies practice. He has been inducted into the Legal 500 Hall of Fame. Congratulations, by the way. And he's of the class of 1986. I think that's required just to give your alumni here. Sitting next to me is Danielle. It's okay. Yeah, Medeiros. Danielle is an award-winning experiential marketing leader whose career spans SaaS platforms, ad tech, and B2B marketing at scale. At LinkedIn, she created and scaled flagship experiences, including Vita Believe and JW Insights, and has led LinkedIn's presence at Cannes Lions, Davos, and the IAB Newfronts. She brings a practitioner's perspective on what it actually takes to build presence on the platform, how the algorithm works, what founders consistently get wrong, and what getting right looks like. She's class of '99. And then Linda Zebian, great, I had to practice that. Linda is VP of Communications at Muckrack, a SaaS platform built for PR and communications professionals, which makes her a little customer of our own product. She leads PR, brand, content, and executive communications across the organization. Before Muckrack, she spent a decade at the New York Times, leading communications through the company's transformation and global digital subscription business, including launching the Times' first ever brand campaign, which was called Truth is Hard, which won the Cannes Lion. PR Week named her a woman to watch in 2024. She's down here from Massachusetts and class of 2005. And then Bill Murray, whose company is Life Story Magic, although he does
Murphy. I've been getting that since I was 9 years old.
Yeah, I was bound to make a mistake. Bill is a contributing editor at Inc., where he has published more than 2,000 articles on leadership and entrepreneurship, reaching over 300 million readers, and the founder of Understandably, a daily newspaper, a newsletter with 170,000 subscribers that he has published since 2019. He's an award-winning author whose books span Harvard Business School, West Point, and American Entrepreneurship, including The Intelligent Entrepreneur, which won the Audie Award for Best Business Audiobook. He's also the founder of Life Story Magic, a service that records and produces professionally edited video interviews, preserving people's life stories and family histories. Early in his career, he served with Bob Woodward as his lead assistant at the Washington Post, and he was deployed to Iraq as a foreign correspondent. He's class of 1992. So I hope that's we're going to start, first of all, in terms of framing what the panel should be all about. You have amazing B2B marketers in the room. They've lived it from every single angle. What we're trying to get out of this is to share the collective experience, and hopefully you'll get something out of this that you can use in a practical way against your own business. The goal is simply leave here with something you can actually do. So there's a Q&A at the end, and please feel free to ask questions. We're going to start with why brand matters earlier than founders think. We had a pre-call, pretty animated about this topic in particular. as a startup, and I've done my own, brand tends to always lose out to other pressing issues and other strategic issues. There's always a product decision, a customer call, something else that you have to do. But companies that break through in B2B typically have a really strong brand and a really good presence about what brand is all about. And almost always it's made brand decisions early and intentionally, and that's the key to that. So I'd like to start with John. You've seen what happens when early stage companies get brand and IP right from day one, and what it costs the ones that don't. From your experience, what are the decisions they skip more often or most often, and what does it actually cost them?
Well, I can tell you from experience, it can cost them quite a bit. I've represented some early stage companies in multi-million-dollar litigations who didn't get their brand right because their trademark clearance, which is a simple process, wasn't done properly, but also represented emerging companies to becoming advanced companies because they got it right. And getting it right means not just making sure you own your brand or your trademark, etc. It means defining your brand consistent to what your business is. It ought to be who we are, what we are, and what we stand for. And a lot of companies will take a shortcut, and the brand is usually a descriptive term of what the product is. Not very helpful. It's useful that they be thinking about it being suggestive, but more than being suggestive, what do they stand for? Not just for the investor community, but for your ultimate consumer. And the story I'd like to give about that is when Steve Jobs came back to Apple in the late 90s, he gave this great speech, which I encourage you to watch on YouTube, and he talks about how he rebuilt Apple from the ground up. And he basically decided that Apple needed to be a startup again. It was all wrong. They had too many products, they stood for nothing, their brand didn't mean anything, and what he did was scrap hundreds of products, start all new with all new products, including the first MacBook, and hired Chiat Day as their PR firm to launch an entirely new branding campaign so that he could tell the consumer what they stood for. And that campaign, for those of you that remember, was called Think Different. And it was transformational for Apple. They were basically a startup when he came back. And that's what good brands do. They recognize that their brand is more than just their product. It's what they stand for, what their values are, and they take the time to get it right. He spent so much time getting it right, including getting rid of product lines, so that the business was married to the brand, and the brand resonated some way with consumers.
Thank you. Linda, you ran communications for the New York Times' first ever brand campaign during a period of real institutional trust erosion. What did that teach you about the connection between brand credibility and revenue? And how does that apply to the founders building from scratch when none of that exists today?
Yes.
So, yeah, I mean, the New York Times is a 160-something-year-old institution that never had to do brand marketing for 158 years, right? Everybody knew the New York Times, everybody trusted the New York Times, everybody believed the New York Times. That all changed 2016-ish, I mean, before that too, but we were asking folks to pay to support a 1,500-person newsroom by buying digital subscriptions because the ad money was gone. So we had to come up with a way to help people understand how independent journalism is made. And how do you do that? You pull from here. And that's what brand is. People now buy from companies they believe in, that their values align with, that they can tell their friends about. And it's not a given that you have trust just because anymore. The world is such a polarized place, and everybody has a platform to share their opinion about your brand at any given moment. Your employees, your partners, your investors, your customers can make or break you online. So I think that, we came up with this. I did not. It was a Droga brand campaign. Droga 5 is an advertising agency, creative agency, that basically said the truth is hard. And the truth is, and then it's a great campaign, you can YouTube it, that we ran on television. And we'd only run like buy the New York Times subscriptions for, bundle the New York Times, Sunday Times kinds of, ads for decades. But this was the real first one where we had to say, hey, we are the New York Times. This is how journalism gets made, and this is why you should pay for it. And it paid for itself in spades. And we also, at the same time, established a new mission of the New York Times to go along with that, to help people understand what does the New York Times stand for and what do they do. Not what's the newspaper or what's nytimes.com or what's the app or what's the games or whatever it was. It's who they are and who we are and what do you do, and are you going to pay to support that, and are you going to say, I'm a New York Times subscriber? That's a community, that's an identity, that's where we really want to play into with this kind of thinking.
Thank you.
Can I add a comment to that?
You absolutely can.
I literally was just at the office and our CEO was in town and he was giving a presentation, and just to add on, something we see at LinkedIn all the time too is it's trust, right? Trust is so important right now, and LinkedIn is the platform that people trust more than most other platforms. And we did this data study with Kantar, and we saw that people are 5 times more likely to buy products or a brand that they trust, and that their connections on LinkedIn trust. And so like your network on LinkedIn is so very important, no matter what stage, founder, if you're a company that's been around for 160 years, it's the people that are in your network that you trust, that you're gonna look to say, oh, well, she's my good friend, I could call her up, but like I see that she likes them, she comments on them, and oh, okay, she's buying from them. So like, let me reach out to her and see how she feels. Like that's how, it's this huge buying circle that happens, and it's made up of the people that you trust, and it's made up of the people that are on LinkedIn.
Thanks. And actually, we want to dive into LinkedIn a little bit more. It's a good bet that almost everybody in the room here is probably on LinkedIn already. As I mentioned, I met Christian on LinkedIn, and he does his prospecting on LinkedIn. It's by far the leading platform for an operating system now for B2B marketing as well. And we know that it's now about thought leadership, personal branding. There's a lot of new products that we see emerging out of LinkedIn. But most founders, as we talked about in the pre-call, are using it sort of like a bulletin board. It's their resume, their live resume. So since you work inside, can you, and you run this internal team focused on helping founders and executives show up on the platform, can you share 2 or 3 things that people consistently get wrong, and what does getting it right look like?
Christian found me on LinkedIn too. And then I love a Stag alumni, so I'm always like, yes. And no, I do not run that team, and I definitely should not run that team. I run events and experiences, and I help bring our brand to life in the real world, which a brand like LinkedIn still needs to shift perception, even in this day and age. But we do have a team that does that. But I've been there 6.5 years now, and the company's always evolving, but there's definitely things that I've learned, and I work closely with that team because we bring them on site to all of our events, is that people get it wrong majority of the time on how to engage and utilize LinkedIn, especially, first of all, I'm definitely not the person, I'm still trying to evolve my presence on LinkedIn and get better at it. But every business needs a LinkedIn strategy, and if you don't have one, you're gonna fall behind. Because in this day and age, you need to be actively utilizing this platform as a business and as a human being, and as your own personal brand. And if you're not doing all 3 of those things, you're just not going to get the right leverage out of this platform. And so some of the things that we see is like the one thing that you just said. You're using it as a bulletin board, you're looking at it as like a job place to update where you're working, or just make broad announcements. And you really need a strategy where you're engaging with the platform regularly. So first of all, consistency is key. Showing up as a brand and as your personal brand. So like, for instance, if you're this founder of this company, who are you? And then these folks on stage before just talked about like the founder is still really important for them, and knowing who you are to invest in you. Well, so is that for the community, right? They need to understand who you are. And if you're just out there marketing your company all the time and just posting random articles, That's not helping anybody see behind the curtain of like, who are you? Why did you start this company? And so you should be on there and be human and share and engage. So you need to be on the platform, and it doesn't mean you have to be posting all the time. It means you need to be engaging all the time. And that means reacting to the things that are important to you, commenting on posts that mean something to you, adding into the conversation, being a part of the conversation, being human, having a point of view. And then consistency, that's the other really big thing. You can't show up like once a quarter. You need to be on the platform a minimum of once a week. And like I said, it could be different ways that you're showing up. So you're sharing an article that you want to, that your company, someone in your marketing team wrote, or that you wrote, and you want to post that. Then you want to like get on platform on video. Then you want to get on platform with just your point of view reacting to someone's post. And you want to react to like something. You want to email somebody or DM somebody. All of those things count, and all of those things play into the algorithm, which is what's really important. So the more that you're engaging and the things that you're showing us that you like is how your feed gets built. And your feed is getting built, and literally, again, this meeting today, they're just constantly showing us all the new products they're making, and like they're trying to make the feed and the algorithm even better and better to like focus on what you as a human and your business needs and wants to learn, the people you need to be engaging with. So if you're in event marketing like I am, my feed is flooded with experiential and event marketing. I'm constantly getting news, and I'm learning from other event marketers or other B2B marketers. I don't see anything about venture capital. I don't. It doesn't come into my feed, but that's not the world I live in, and that's the algorithm being really smart. I would say you have to look at the platform as a room that you've just walked into, and how do you want to build relationships? It really needs to be a relationship building engine, and a way that you scale that for your business and for yourself. And like I said, there's just, the more and more you get on the platform, the more comfortable you'll get with it. The only other thing I'll say is, as a small startup or any sort of SMB, that is like our sweet spot. That is like the customer that is so important to LinkedIn, because you can literally use the platform for everything, like a 360 for your business. Okay, I want to get on the platform. I want to market my business. Okay, I'm going to get online. I'm going to use the marketing products that LinkedIn offers, which is I can post articles and then I can promote them with ads. I can post a video of myself talking about a topic that's really important. I can also then put I can put an ad around my video to promote that and boost performance. You can use our recruiting tools. You can use our talent products to help search and find talent. You can use our sales products to like find leads for your business. So it's literally like a one-stop shop. And if you spend time learning about all of the products and all of the ways that LinkedIn can help your business, it's truly game-changing for small businesses.
Can I just add something? Sure. So I currently work at Muckrack, was a B2B SaaS platform. We were founded in 2009, but we had our one singular investment, 180 million Series A from Susquehanna in 2022. So I just want to share that in the context of this room, because I know a lot of folks are working in tech and B2B. So last April, we decided that we wanted to make my boss, my co-founder and CEO, Greg Gallant, a top LinkedIn voice. How are we going to go about doing that? And by December, he was. And how we did it was by creating essentially a persona, but it wasn't like creating it. It was pulling and extracting on the things that he cares and knows about: PR, comms, reputation, crisis comms, measurement, insights, media, all of that stuff. And we created a regular calendar of cadence of posting for him on the issues that people identify with him. And I'll also say, I also run our main handle, and I'll tell you, based on the analytics that Muckrack provides for us, because we do social, the product updates, the hey, we have this, snooze-a-rama, not gonna work. No one cares. You know what the most engaged content is on our main handle on LinkedIn? It's like employee profiles, and we went to Mexico for an offsite. You know what I mean? Because again, this is about people, and when people see like more kind of hard, techie, financial, no, LinkedIn is a community, and who are you in that community? Who is your CEO? Who are your executives? These are the kinds of strings we want to
Bring your personality. Bring your personality.
Bill,
Thank you.
I have a secret weapon to share on, this goes to personal branding, but it plays into everything that you guys have talked about. And I actually think I first learned this in the early 1990s in Father Tom Regan's modern philosophy class at Fairfield. And it's his concept, so it's funny, right? I learned how to post on LinkedIn before LinkedIn existed, but that's, actually, this goes all the way back to Aristotelian times. And Aristotle had a concept, I believe it's pronounced telos or talos, and it's a concept that every person has a perfect state that it wants to get to, a beneficial, mature state. So these chairs, for example, they're being used for a good purpose right now, right? We're all having a good meeting, we're talking. That's a good thing for them. But if they're in a storeroom somewhere, that's not as good a thing for them. And I think it's the same with people. And we are all hardwired to root for each other in many cases. I mean, I'm looking through the people that are going to pitch tonight and some of the panelists. I don't know about your business, but I'm like, yeah, I want you to succeed. But I think we really want to succeed when we see that people are moving towards their telos, okay? And I think that goes to the authenticity, why the CEO of Muck Rack, you can go through and say, well, what does he really know about? What is he passionate about? That's what we're going to write about. And when we get into talking about branding, whether it's on LinkedIn or anywhere, I think the more you know yourself and you know how your business is an outreach of yourself and what you're doing and what you're posting, the more likely you are, everything else being equal, to get a following and get people to say, oh, I want to root for this person. I want to hear about the next time this happened or something happened in their business. And I'll just make one more point. I mean, I write a lot. I've written a daily newsletter every day going back to 2018. And there were a lot of questions like, how do you do that? Well, with a great deal of difficulty sometimes. But one thing I had to really address was how much I was going to be a character in the things I was writing about. And I write for Inc.com. I've written about 2,000, 3,000 articles for them. And I'm often writing about things that have nothing to do with me, really, right? I mean, I'm writing about big company decisions. I'm listening to so many earnings calls. I'm writing about recent studies and things like that. But I've found that by putting 15% of myself into the story, and over time, if you read my articles, even though it's not a personal column, but you'll learn that I'm a 50-something guy with a 10-year-old daughter, and you'll learn that I lived in the city and now I lived in the suburbs, and you'll learn that rah-rah GLPs, I lost a lot of weight, and you'll learn that I've been skiing like a madman this year and enjoying it. All of those are, I think they're personal connections. People are like, oh, I'm kind of interested in what this guy has to say, and they get you to read the next article. And so even though I'm not really, I mean, I am a founder now, I do have a business and we'll see where it goes. I'm not necessarily building a brand in order to build that brand. I definitely think that is, it's kind of a secret weapon. It's such a core thing that we probably don't even realize why we're rooting for people, but sometimes that's why.
Well, that's a great plug for Fairfield that you're quoting Aristotle, by the way. But also, one of the things that I've read a lot recently is how important storytelling is to business. And that used to be a business unto itself. And now all businesses want to be able to tell their story. And telling your story is very different than putting up product updates or talking about their capabilities and their services. It's taking those product updates and services and creating context that people are interested in and how you drive engagement. We're going to move ahead a little bit and talk about content and audience building. And actually, Bill, we wanted to pass it along to you. One of the most effective things a B2B founder can do is publish, and it's what you were just talking about. And it's not press releases, as I think, Linda, you were talking about. It's not polished corporate content. And you've been doing this now, and I can't believe you publish every single day for 6 years. What can you share about your strategy around that, and how does that sort of feed the rest of your businesses? And what's the objective of that kind of business within all the things that you do?
Sure. To start with, when people ask me how do you what advice do I have for someone who wants to start a daily newsletter, I'm like, well, don't start a daily newsletter. I don't know what I was thinking. I mean, that's self-deprecating. I did that because I was already writing Inc.'s daily newsletter. So I had a following from there, and then that was going through some transition. I said, if you like this, I'll be doing this starting next week. And so I started with a big bump, and we had the cadence already going. But I think you mentioned earlier, calendar is very important. It doesn't have to be daily, but people burn out quickly if you can't map out weeks ahead of time. And it doesn't mean you've written them all ahead of time, but you have a sense of what you're going to write about. And I would say it's very interesting that everything, it's a joke in my family, my extended family, everything that happens to me becomes fodder for a column or a newsletter. I guarantee you there's going to be a column about personal branding, okay? If you happen to see my Inc. article tomorrow, presuming I finish it, it'll be about, what's this one going to be about? Oh, you know what it is? It's the Aristotelian thing about telos, actually, and also having to do with Chris Kopensky, is that his name, the CEO of McDonald's, trying to sort of rebuild his brand after, you know, daintily nibbling at an Arch Deluxe, right? But I'm like, you're a marathoner numbers guy who was brought in because you're Mr. Clean. Like, embrace that, be that guy, you know, and he's kind of doing that. Actually, if you saw his interview with the Wall Street Journal, he sort of blamed his mother because he said, she taught him never to speak with your mouth full. And I'm like, that's just great that you blamed your mother. That's just so awkward. So there's that. So those are the two things. But I really think you, it changes the way you see the world. You know, comedians and entrepreneurs, I think we all live in the world with them, but they see it differently, right? They're like, how did you see that pattern? And as you start writing like this, you start building a cadence, and that starts happening to you too. You start realizing, yeah, actually I have a newsletter tomorrow, understandably.com, and if anybody subscribes to that, you'll see like an experience of going to Five Guys with my daughter becomes a newsletter.
So I think that we also have to start thinking about generative engine optimization and how you're showing up in the LLMs. And content is the number one thing to do, or way to do that outside of earned media being press. And press is free, that's why it's earned. The PR people that you hire, the agency that you hire are not free, obviously, but there are ways, if you are low on budget, to create content that resonates. What content resonates with the media and in the LLMs, which are synthesized answers that pull from all over the web? That is original data. So what interesting data in your business do you have? What interesting data can you pull from? Who on your team should you be talking to? Your product people, your engineering team, they're not thinking like storytellers. They're thinking like product people and engineering people. You need a storyteller to be thinking about, what is the story here? What data can I share that's proprietary to me, that maybe I'm providing, or maybe that I have about customer usage or something, to get my brand in those conversations, right? So, survey data even. Do an online survey, get a SurveyMonkey account. It costs like very little. Get 1,000 respondents and it's valid, right? Get somebody to run the data, run the numbers for you. And then you have endless amounts of owned content, earned content, social content. And it has legs for days. And the LLMs are really will pick up those numbers, and then you'll be cited. And so when people are looking for a business like yours, they cite, the citations mention your brand. There's lots of other ways you can use content marketing, but I'll stop there.
Wait, I'm going to add to that.
So another stat from LinkedIn today, I'm just full of them, is that LinkedIn is the #1 platform that is found for LLMs. Get on the platform, start posting, because we are the #1 platform right now. Is literally data that came out like 2 weeks ago. So if you're actively posting, sharing that proprietary data and getting yourself out there as a personal brand and your founder brand, then you're going to be cited in the AI tools.
Thank you. The next topic, Bill touched about the McDonald's example.
We might, just given the time, we might just want to cut to Q&A.
Okay, great.
For the sake of time. So,
anybody?
Yeah, why don't we open it up to the group?
There's a mic in the back.
Oh, great. Let me get that. Thank you.
Thank you. Yes.
Or maybe just yell to yell, I guess.
Oh, my voice is so soft.
Try it again.
All right. So I just have a quick question. So how do you balance personal brand with career? I'm a public health analyst with the federal government, but also, got into the world of entrepreneurship and, it's all related. I did a TEDx talk on behavioral health, and we've built an app as well, which is also behavioral health related. But it's related to my career, but at the same time, public health, but at the same time, you have to be kind of careful with conflict of interest and all of that. So I just wanted to know, that's just a specific example, but how do you build the two together?
Okay, so I would say, yeah, I mean, I get what you're saying. I work at LinkedIn, right? And I have a brand at LinkedIn, but I also have side hustle businesses that I operate as well. And so it is tricky. I try to build my personal brand more neutrally though, right? So if the topic is, what is it, public health, you said?
Oh, that's my career is public health, but the topic is like behavioral health.
Yeah, it's still all tied together, right? So you should just be on, and this is like your LinkedIn strategy, but you should be on LinkedIn just talking about that piece, right? Talk about health, talk about behavioral health. That's not gonna take away from your job, right? It's not gonna conflict with what you're doing as your day job. I talk about experiential marketing, right? It's not taking away, I have my own experiential marketing company. I also work within LinkedIn. I have a community that I'm building, but it's just still building my personal brand as constantly showing up on platform, talking about the business, the industry, my take on it, ways to get better, like an angle of twist on B2B because that's my specific sweet spot. And then people get to know me and trust me, and so then whether or not it's within your corporate day job or within the business, you're still showing up as yourself and the things that you're most passionate about, and they're getting to know you.
Yeah, because I want to leave on my own accord and I get fired for doing all this, you know, so, yeah.
Another simple way to do it is just reposting things that you find interesting in your field.
Commenting.
And commenting. Those are, I know commenting shows up really strongly in the algorithm, does on every social platform.
Right.
And that sort of is a low lift way to show people that you know your industry, you're following it, and your feed is something that they want to continue to pay attention to.
Thank you.
Hello, I'd like to say thank you for Nick's accent, and I'd like to thank Jack Burridge for his English accent. I'm a guest of Jack at Meridian, and I did not go to Fairfield University, which you can probably tell. My question, this is amazing, side hustle, so Danielle, I have a side hustle. We co-founded a comedy night for HR professionals, right? And we were just on the Morning Brew podcast yesterday. And my question, because we've got all these VCs and we're all talking about tech and AI, how do you scale, how do you invest in experiences? Because to your point, I forget that, Linda, people react, I have the data on our LinkedIn page, which is amazing, and I was on it, right, as you're speaking, posting stuff. People react to people react to the faces more than anything, right? But it's really hard to scale experiences through technology. So it's an open question around how should we think about that with investors in the room, perhaps looking at that as well. I don't work in tech, maybe I can build something with Claude, but I've got kids and I've got other stuff I need to do as well. So,
scaling experiences like in real life experiences?
Just events and experiences. Okay. Like it's hard to, 100x an event.
I'm going to tell you how.
Okay.
On LinkedIn. Guys, it sounds like I'm an ad, it's horrible. So we have new events products, and I'm a huge advocate for them, and I go around speaking about them all the time. But so I'm a huge advocate as well of really in real life experiences. I'm super passionate about it. It's not where I started out. I started out in advertising. I worked at BBDO, and I worked in television media. But I did all of this on the side. I had a side hustle in events, and so I made it my real day job because I'm super passionate about it. But it isn't a moment in time. No event should be one moment in time. Today should not be one moment in time. What happens after is the most important, and it's what drives ROI. You can try to drive ROI in real life experience, but it's what all comes after. It's the deal that closes, it's the relationship that's made. But on LinkedIn, what you could do, let's say today, right? Let's say you have this camera here who's filming the stage. You film this whole footage raw, you edit it down, you post it as live. Doesn't actually have to be live. You use LinkedIn Live to post this on the platform. You set up an events page and you advertise that event leading up to when you're going to air it live. You drive tons of engagement. You post commentary. You talk about the people on the stage, the speakers. You put ads around it and promote the event. We have event ads. Then now you've driven 3,000 people instead of 35 to watch this event that just happened in this room today. Christian, you should also do this.
I'm taking notes.
Then now you're engaging with 3,000 people on the platform live, commenting throughout this entire thing. You're getting engagement, you're getting leads. And now after this event happens, you can also clip it up into small social posts, and then you post those as event ads after the event, or thought leadership ads. So you grab me, you grab Linda, you get us off stage, you get a social clip with us. We take a cute little question and you clip it up, and then you post those, and now you have an event ad advertising the event, you have the live event driving attendance, engagement, commentary, and then after the event you have ads promoting the event after, because you clipped it up, and then you have these thought leader ads. Now you track all that engagement across all those posts. You usually 100x the engagement with the event.
If I could just add to that, on LinkedIn, which Mayor Brown, believe it or not, uses as well, we have a link to a series that we do called The Upper Brand. It's all about building a brand. It's advising clients on the importance of building a brand and key things. And we do AMP quarterly seminars on exactly that topic. And we will post, again, a video segment from the last conference. For example, when the McDonald's CEO had that little kerfuffle, we had a segment about the importance of reacting to a mistake in real time to rebuild your brand. So we reposted that to our Upper Brand page on LinkedIn. So just wanted to echo that.
Yeah, and I'd also add one thing. Workflow is everything. One of the businesses I had, we did 1,200 pieces of content a month. 1,200 two-minute pieces of content a month. We did not do them every single day. We created a schedule where we were producing content. We set aside a certain amount of time each week or each month where it was about the content production, and then the content posting and distribution is a whole other thing. And so you could build it into your calendar. And I think that concept of building a workflow so you don't have to think about it every day is a really helpful tool.
Just on the, just one more thing I was going to add is that, like, when you have an, especially if you're doing an in real life experience that is like to a small audience, or for instance, like I do an event every year that's in the south of France, we can't get everybody, right? You're just getting these people that are there. We do a live morning show from the Quasset to broadcast it back to New York and LA. And now we're sharing so that's how you're also extending experiences, right? So like, again, you're broadcasting something that's happening in a moment to different audiences in different time zones. So again, another way to like bring those experiences to have legs.
Can I throw it?
Just one quick LinkedIn tip because it worked for me. But raise your hand if you feel like your LinkedIn profile could be better. Okay, here's what you do. Screenshot the whole thing, drop it in Claude, and say, fix this. No joke, I did that about 2.5 months ago, and I mean, I get a lot more inbound now. I mean, I don't know, correlation, causation, but that's how Christian came across me. Screenshot, drop it in, and say, fix this, and say, spare me nothing. It was insightful. It was, you're being way too weak about this, and did you really do that? You know, anyway, so we improved it. So
We're going to work with Christian to get LinkedIn community managers to come and do a whole session on that too.
Bill, I did the same.
We would love that. Why don't we give a round of applause for this meeting? Round of applause. We have one last question, but it's going to be quick.
It'll be quick. Oh, okay. Amazing panel, but something that you said, Linda, really resonated about like having original content. And it's interesting for us. I'm trying to lean harder into thought leadership, but we operate in a dual market with trucking fleets and the Fortune 500 companies that contract them. Sustainability has become something that's like politicized. And it's been interesting for us to pivot, not away from sustainability, but more towards efficiency and profitability so that it's resonating. But when we talk about authenticity as a founder and as a brand, our mission has not changed. And so I'm curious if we want to lean harder into thought leadership, especially me on a personal level across our platform, how I can do that without polarizing both sides of the market that we're serving.
It is impossible to not alienate one side or the other, no matter who you are or where you work. The straight answer is whatever your mission is, whatever your organization values are, never change them. If you flip-flop, you're going to be, if you flip-flop based on who's in the White House, you're going to alienate the other side of the coin, essentially.
And then somebody else will be in the White House, or there'll be some other trend influencing, there'll be some other rage thing happening on TikTok, and you're gonna have to react to everything. The bigger you get, people are gonna, your customers, your employees are gonna look to you, what is your position on this or not? Not taking a position is a position, by the way. So saying DEI, like not responding to DEI, if that's authentic to you and your brand, don't respond to DEI. But don't base that off of what's going on in the political sphere, because it will clip and bite you in the rear end so hard. Target, love you Target, but look what happened to that. Bud Light, I mean there's so many stories. Bud Light literally went from the #1 beer brand in the country to #2 overnight after that, whatever it was, issue. So they have to stay, you have to stay authentic, or you're gonna lose your reputation and trust. Trust is everything. It is the #1 thing that translates to revenue. Never forget it.
Could I just add one very quick thing, which is, I agree with all of that. I'm basically a solopreneur, right? But I will tell you that I know that I've lost probably 50 grand in annualized recurring revenue because, I mean, the opportunity cost was more recurring revenue, let's say, but easily $50,000 in canceled subscriptions because of my paid newsletter, because people say, that political issue, I disagree with you strongly, unsubscribe. But you can't, in a daily newsletter in this environment especially, you can't not address these things. So I just had to eventually embrace the suck, so to speak, that it's no fun getting unsubscription notices, especially when you're thinking, I'm counting on this to make a living. But you have to have the faith that I'm doing, and a company as well, is doing the things that are really core for the long term that'll build something bigger.
And I would say this too, the audiences today just want authenticity and honesty. So if you're not true to who you are and the business that you built, they'll see right through it.
Yeah, and I would say that we all live in an incredibly public environment now. The platforms are public, we all share way too many things, and if you're not consistent about what the product is that you're advocating for, I love that answer, which is silence is saying something about your brand as well as advocating for it. So we have to deal with the criticisms that come with it. I come out of the sports business. Athletes deal with criticism every single day. Talk to them, and they still have to get on the court the next day and perform. So think about it from that perspective.
Amazing. Amazing panel. Thank you guys for the insightful discussion. I was very excited to hear what they had to say, as I think it's very present in terms of well, everybody's kind of feeling overwhelmed with LinkedIn, but who are the people that are cutting through? And I think there's some pretty good insights. I'm glad this is also recorded. Danielle, thank you for that. Talk about iteration. We're going to be acting on that next event, so sounds great. So I would like to give a round of applause thank you for all of you who attended. And all the panelists that were here. With that, I also do want to remind you that if you want to support, yes, you can fill out the QR code, but you can also support it. We are trying to raise $50,000. We have secured 3 people that have agreed to support the program. We are a nonprofit, and we get to have this amazing support for students like this, getting real world experience, as well as the founders in our program. So thank you very much, and I look forward to having a drink with you in the room over here.